stock market morning prep video for Monday, June 9th. Got additional movement to the upside. Non-farm payrolls numbers came out. They liked the non-farm payroll number itself, meaning the market participants, and we started to move higher yet again. We're up about 13 trading days, literally vertical. So you have to use caution in this market, and I've been saying it for weeks, and I continue to say so. I am not a bull. I am not a bear. I just follow what the trend is and what the market trend would be for that immediate future that we're talking about. And obviously the markets are up. The problem is that there's no volatility. Everybody is one-sided in the marketplace. And that's what scares me as a contrarian. So not that I'm looking to short the market, but you have to use caution here. And I think the markets are due for a real healthy pullback. I thought it was back several weeks ago, and that did not happen. We got a little bit of a blip, and then we started to roll over a little bit, and then we just rocketed higher. So the Draghi comments from last Thursday helped fuel the markets higher yet again, still on very light volume. So again, guys, use caution and be patient in this market. If you're patient enough, you will get rewarded. I know it stinks that you're sitting in front of a screen not doing much, but it does help, trust me. Let's move into the chart segment. There's really not much that I'm going to give you new, but I want to just go through these indices, and I'm starting to look at sectors that have base and that may have some additional movement going in to the summer months, and I will start doing that this week, because if there's no change and the market just continues to go higher and higher, I want to make this informative for everyone. Okay, all right, so let's look at the bonds. As you can see, we do have that inverted head and shoulders still valid, as you know. Let me just put that. Okay, so we have the left shoulder, head, right shoulder, broke out that slanted neckline, and the extension, the 2618 extension, is actually the head and shoulders target, which coincides nicely, as you can see, and we hit the 1272 extension and we rolled over, and that's what I was looking at with the equities. We hit the 1272 extension, we didn't roll over, we broke out, and now we hit the 1618, so we're at double extensions. This is not a place to be adding any long trades. But anyway, still constructive, right? I mean, yeah, it does look like maybe a small, let me just get a little trend line pointer. It does look like a little bear flag here. And then maybe, who knows, just maybe bonds do start to roll over again along with the Japanese yen. And that'll just fuel additional buying for equities. And that's possible when you have, you're in a summer month trading with light volume. So you just got to be careful here on either way, on either side. Here is the ES daily. We hit the 21618, and we got past it. We hit 1950 to be the big target. And again, we are now at double extensions. This is not a place to be looking to add to long trades. Okay, day trades. If you want to feel you're comfortable with it, that's fine. You can see stochastics at 97, RSI back at like 94 or 81 at one point, and then lighter than expected volume. So just again, word of caution. That's all. Here is the hourly chart. Just wanted to show you from consolidation here, and then 2 days up, and then the markets rolled over. I think you have to realize, I mean, is this really sustainable for the last 2 weeks? I mean, this is a little bit much, if you ask me. But again, not what I think; it's what the markets are doing. So, diamonds broke out, made new all-time highs yet again. And the thing is this: if you ask yourself, well, okay, what is the reasoning behind this that the markets are moving higher? If you really look at it, there really is no major catalyst other than, now Draghi said he's going to do something, and he made negative interest rates, which really doesn't mean much. In the eyes of the beholder, if you're really looking at it, it doesn't mean much at all. It's just that he did something that I think the markets were really bullish about. Okay, so let's take a look at the transports. Again, I feel the transports are going to look to roll over, and I think when you get a move this high, that you're way away from the 8, the 20, and even the 34 and the 50, I think, to me, you're going to get that pullback. And on low volume, it's just a matter of when. Unfortunately, we don't know. But this is one of the cards for me to look to short this indice when it does give me a sell signal. Okay, and we got the IWM straight up for 2 days, Thursday, Friday, coming off that bull flag. Does look much better now that we broke this downside support. And this bearish trend of lower lows and lower highs. So I do like this, But you need a pullback. You're not going to buy this up here like this. And again, you shouldn't be anyway. Lastly is the Qs. We had Apple. Apple split on Friday. Should be trading around 92-ish, I believe. So you'll see that if you guys are Apple traders, you'll see that split and that conversion for today, trading for today. All right. Well, listen. Be careful, and I would be definitely looking to tighten up your stops if you're swing trading, and if not, if you're day trading, be patient out there. Things will come to you. Now, I'm going to again look for watch list of stocks and sectors that I think have base and are not overextended and are not overvalued or fairly valued for that matter. We're not going to be looking to buy stocks that are up 20, 30, 40% in the last 3-4 weeks. We're going to look to buy stocks that are coming out of basis, and that's what we'll do, and that's how we will stick to the trend. Okay? Have a great day, everybody. We'll speak to you tomorrow. Take care.